I'm going to show you an image, and I want you to tell me the first thing it makes you think of. Yes, it is a triangle. How about money, retirement, freedom? Now, how do I connect these concepts with something as simple as a triangle? It's not as much of a reach as you're probably thinking. We actually use triangles every day to make consistent money from the stock market. And I can show you exactly how it's done. Our mission is to help you build wealth, one video at a time. Welcome to the vault. What's going on, family? It's your favorite headless YouTuber back again with a brand new video. And as always, before we get into it, let's get started with some Monday motivation. Don't let the uncertainty of tomorrow prevent your progress for today. Sometimes it's okay to just focus on putting one foot in front of the other.
Amen.
Amen.
In today's video, we're going to talk about another elementary concept that you can use every day to make money in the markets. This time, it's triangles. And of course, I'll top it all off with our weekly watch list. If you're new to the channel and like what you see so far, show us some love by liking the video, subscribing, and making sure notifications are turned on so you don't miss any new content. Without further ado, let's get to it. I won't waste your time explaining what a triangle is, so let's get right into how we use it to make profitable decisions in the stock market. First things first, as we already know, the market only moves forward in how many directions? Exactly, 3. Up, down, and sideways. Triangle patterns in the stock market are made up of at least one uptrend or downtrend in conjunction with either another opposing trend or a flat support and resistance line. There are 3 specific triangle patterns that we'll pay attention to today. The first one is an ascending triangle, and it looks like this. You see we have an uptrend line meeting a resistance line. Here you can see the stock is making higher lows, but not making any new highs. The idea here is that one of these trends has to give eventually. In the case of an ascending triangle, the expectation is that the uptrend will win the battle before the 2 lines intersect, resulting in a bullish breakout of the pattern. The next triangle is the descending triangle, which, as you can probably guess, is just the opposite of the ascending triangle, where you have a downtrend line meeting a support line, meaning the stock is making lower highs and maintaining the same low over a period of time. In the case of the descending triangle, the expectation is that the downtrend will overpower the support line, resulting in a bearish break of the triangle. The final triangle that we will discuss today is the symmetrical triangle, or the wedge pattern, where a downtrend line and an uptrend line are present on the stock at the same time. The strategy for a symmetrical triangle is very similar to the rectangle strategy from last week, because we play them both the same. Because there are 2 trends present, we simply wait for the price to decide which trend is stronger. Once we get a break above or below the triangle, we treat that as the green light to continue to play in that direction. Key things to note. Just like with all the patterns we've discussed on the channel, we always want to wait for a break for confirmation that the pattern is being respected properly. This increases our chances at being profitable on each trade. Number 2, don't go looking for any of these patterns. Let them come to you. The more obvious the pattern, the better. Sometimes you can trick yourself into seeing something that really isn't there. Kicking off this week's weekly watch list for October 24th, we'll do a recap of last week looking at Tesla. Tesla did exactly what we expected to do. We prepared ourselves for 2 scenarios on Tesla. We were watching our 206.73 level. If we got an open below it on Monday, we were expecting a bearish week. With the open above it, we were expecting a bullish week. In this case, we did get an open above, and you see we got a nice run up to our 216.17 and then to our 225.02, where we then saw it consolidate, create this box between 225.02 and 216.17. Once we got a break of our rectangle of our box here, we saw us drop to our next level at 206.73, where we found support once again, and then we end up finishing the week off back right underneath 216.17. So same thing for this week. Prepare ourselves for two scenarios. If we get an open above 216.17, of course, again, I see us running back to our 225.02 level and possibly to our 235.35. But for now, all we'll do is just play from level to level. So from 216.17 to 225.02, and if we get a break above the 225.02, then we can see our 235.05. Moving on to AMD. AMD is in the same area that it's been all month. We fell into this consolidation zone between 59.80 and 55.82 at the beginning of October, and we've just kind of been bouncing in between it for the entirety of the month. So same thing as last week. I've already moved the lines down. Moving on to exactly what we wanted to do. Again, we prepared ourselves for two different scenarios. One where we either opened below 52.68 and possibly ran down to 51.41 and 49.82. Then the other scenario, which is the one that actually ended up playing out, was an open above 52.68, where we'd run to our 53.90 level and our 56.01. Which good for us. We were able to tackle both of those levels on Monday with a nice pop-up going into Tuesday. Another consolidation, same as Tesla, before we broke down. But if you pay attention, you can see that each one of our levels were respected all throughout the week. Where we found resistance underneath 56.01. We also found resistance at 58.11, where it officially broke down. Found support here at 56.01 again, where it consolidated before breaking down during the pre-market. Again, found support at 53.90, just to come down on Friday at 52.68 once again. So this week, same thing. We're just going to continue to play the levels. Since we're sitting under our 56.01 level, we'll play the same way we did our 52.68. If we get an open below 56.01, we expect it to come down to our 53.90. If we get an open above 56.01, we can expect it to run to our 58.11, 59.71, and possibly 63.13. But again, we'll play level to level to level. Because as you can see, if you would have done it this past week, you would have been golden. Each week, I'm just showing you how easy it is to trade the markets when you're disciplined, when you're patient and consistent with your strategy. Obviously, nothing is 100% in the market, but you don't have to be. With the right plan, with the right strategy, you can afford to lose because your wins far outweigh your losses. And if you go back to our very first video on the channel, we do touch very briefly on risk management in that video. So definitely go check that out to get a better understanding of what I mean when I say your wins can far outweigh your losses. All right, that'll do it for today's video. Just remember, don't be afraid to fail, because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, you know what to do. Be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of its content are made for you. Thank you for watching this video, and I'll see you in the next one.